This is Stock Talk, a discussion of stocks in the news with the analysts of Zacks.com. This time we turn our attention to Intel. Word on the street is that this semiconductor giant will have to get into the mobile market in order to grow its business. Analysts say they need to find a new way to dominate cell phones the way they've dominated PCs. Let's see if our analysts agree. They are Tracy Reinick, our value stock analyst, and Michael Vodicka, who analyzes momentum stocks for us at Zacks.com. Guess you can say they need to chip away at a new market, huh?
Uh-oh. Yes, they do.
And that pun was intended, let me tell you. Stock is down to about between $13 and $15 a share, apparently. Published reports say it's the lowest it's been since Bill Clinton's first term.
Right.
What's going on?
Well, I mean, they're seeing a slowdown in their main business, well, they have for several years, which is the PC market. They dominate that market. They make about 80% of the personal computer chips. Right. And it was a lot in the desktops. They definitely dominate desktops, but they're also dominant in the notebooks. They're trying to change over and get some new products out there for the netbooks, which is the next big thing, which is the more portable, smaller devices, but they need the newer chips to go into that. And then also the cell phones, which is just a huge market. There's over 1 billion cell phones sold a year now worldwide, and they're not in that market at all. So their growth rate is really slowed in the last couple of years. The last 5 years, the historical sales growth has been about 4%, a little over 4%, which, isn't all that great when you're looking for, this kind of company. But their underlying fundamentals are still really solid. I mean, they have a ton of cash, over $12 billion in cash sitting there. They pay it, now that their stock is down, quite a decent dividend yield. It's like 3.8%.
Really?
Yeah.
Even though the stock is down.
Yeah. So there's some good things if you're an owner of it, but you're not seeing any growth there. And until they get this new chip, which is called the Atom, kind of out there, and there's going to be competition because other competitors obviously are already dominating the cell phone market and even in the netbooks. Where will the growth come from is the question. Yeah,
the Atom is apparently not ready for phones yet.
No, not yet.
And it doesn't help them, Michael, that they shut down their consumer electronics business in the last downturn, and today they don't even offer, the low power chips at the heart of some of the hit devices like the iPhone and Nintendo products.
It's technology is a sector that moves so quickly that a lot of these big high flyers from the 90s that are as big as Intel is are having a hard time adjusting to the new environment. So you constantly have to be updating your technology and adjusting your applications to what the market wants. And like Tracy said, and like you said, is that we've seen a shift of the computing environment going from the desktop moving to the handheld devices right now. So that's presenting challenges to Intel.
They've warned a couple of weeks ago, didn't they?
They did. They warned November 12th about the fourth quarter. They lowered revenue guidance to about $9 billion, give or take a couple $100 million, from $10.1 to $10.9 billion. And they said they're seeing a significant slowdown across all divisions and product lines, which isn't any different than what we're seeing from most companies right now. But how much worse has it gotten in the last 4 weeks? We don't know. They announced earnings on January 15th, so we'll be finding out shortly.
And apparently the reason why analysts are focusing or say they should be focusing their attention on that cell phone market is statistics show that people around the world open their wallets to buy more than 1 billion cell phones every year.
Right.
That's a lot of cell phones to be able to capitalize on. And today, practically none of those spoils end up in Intel's pockets at any level. But if we had to put a picture to it, Michael, what does it look like?
I brought a couple of charts to take a look at today here, but before we move on to the chart, I want to say that we're seeing the fundamentals. Like you said, they just recently they lowered their revenue projections here. We've also seen that play out in analyst projections. The next year estimate, the growth issue that Tracy's talking about, the next year estimate has dropped from $1.49 per share to just 81 cents. So that's been a pretty precipitous fall. And the way we've seen that play out on the chart here, I wanted to show a longer-term chart, historical chart for Intel to show what they had done during the big boom of the late 90s and what's happened to them since then. Mm-hmm. And as you can see from the chart, they topped off at about $75 in 2000, and since then it's been a pretty precipitous fall. More recently, within just the last 6 months, we've seen Intel drop down from about $25 per share, and recently, right now, they're trading at about between 15 and 16. So clearly, there's a lot of downward momentum on this stock. Now, you might ask yourself, is our shares of Intel a buy down here? Is there value right here? Based upon the next year estimate, which like I said is 81 cents, with shares trading at about 15, we're looking at a forward PE multiple of about 18 and 18.5. That's definitely a premium to the overall market, and it's hard to justify those kind of valuations with the growth projections that are attached to Intel. So I'd say it's time to be cautious.
So what kind of time window do you think they have in order to try to crack into this market here?
Well, I mean, they're going to roll out the Atom, but it's unclear. They're putting it into the netbooks type of applications right now.
Right.
But can they compete on the cell phone market, or will iPhone and the big makers even want them at this point? I don't know. It looks like it's at least a year down the road, I would think.
Well, they face some pretty stiff competition from companies like ARM Holdings,
right,
for example, which apparently, according to a lot of people who know, plays a tough game. And they also have to win over a lot of their high-profile customers,
right,
like Qualcomm and people like that. So they've got a lot of wooing to do,
right,
out there, so to speak, as they try to chip away at this new market. We'll just have to keep an eye on them and see if a year is enough to do it in.
Right.
You said the momentum is clearly down, has been for quite some time.
Yeah.
You don't
quite
see
some time.
You don't see any technical indications that might turn around anytime soon.
On a technical basis, I didn't identify any major areas of support here. But this is really, to me, as a stock, on a long-term basis, it's going to be driven by the fundamentals. It'll be driven by the market dynamics. So they've got some work to do. They've got some work ahead of them, like you guys said.
All right. Do either of you own the stock?
No.
Okay. You had to think about it. Kind of worried me there. And if you have a stock in the news that you would like us to kick around here on Stock Talk, why not email it to us? Mailbag@Zacks.com. That's where you can reach us. We consider all suggestions for future webcasts. With Tracy and Mike, I'm Terry Ruffalo.